Okay, today we're going to go through my trades for the week. We're on week 9 at a 100k high stakes account. I'm going to show you the exact trades I took. We took 3 trades in total this week, and here's the first one. So coming into the week, we started on a Monday. Monday's not always the best day to be trading, but it is what it is. So here we are on USD CAD on the 15-minute chart. As you can see, we had a general downtrend here. All marked up here, pretty strong continuation down. So Monday broke. Like I said, Monday's not the best day, but it is what it is. So we came out the Asian session here, as you can see, into the London session, pulled back to pick me up, and obviously I was looking for a continuation to the downside as per the general trend previously. As it came into that trade, we were aware of these levels here, which have been marked out, because it was also breaking those as well. So if it broke those and continued down, we're good. Now, there's a combination of trades this week, so this is where trade management comes into it. If I just left this trade, as you would see, it went to stop loss, and it'd be minus $700. But as you can see, I was also in another Canadian pair, New Zealand CAD, in the opposite direction in a long trade. So this was USD CAD in a short trade, and at the same time, rightly or wrongly, I was in New Zealand CAD short. So this trade, you need to look at them all together as one trade. So as you can see, I've marked up here. Closed this trade at plus $100, as was also in the New Zealand CAD opposite long trade. And I moved that opposite trade, moved the stop loss to break even. So basically I banked $100 on this account, and the other account was more than break even. So I had nothing to lose then with one trade running. So that was that one. And then if we go on to the other trade, which was the New Zealand CAD, as you can see, I was in a long trade in Canadian pair at the same time as a short trade in Canadian pair, which is not ideal, admittedly. So here's Monday. It's the Asian session. We came out the Asian session in London here, pulled back to pick me up for a continuation long, and that trade would have gone okay, but it would have hit my stop loss. So we would have been out for a minus 1R on that trade. But as I said earlier, we moved the stop loss to break even here, as you can see, highlighted here, and we closed the other trade at plus $100. So now we're free. We have a free trade, and what happens happens. We don't stress over it. I've marked up the text here. So we closed USD CAD. We're on a short trade at $100, and this was a long trade, as we just said. As it was, we moved the stop loss to break even just to protect the account, which is the most important thing, obviously, because this account would have gone to stop loss as well. So we would have been on minus 2R if we just left both of these trades to run. As it was, this trade came up to about 1R, and I closed it, as you can see, at plus 1R of $700. So between the two accounts, the two trades, sorry, on the Monday, we were then in the region of $800 up on 2 losing trades. So 2 losing trades, instead of being mined, because we risk $700 per trade. So instead of being down $1,400, we're now up about $800 on 2 losing trades. And that is where trade management comes into it, and reading the price action at the time, and just generally managing the trades. Fire and forget is fine, but that doesn't really work for me. If I'd done fire and forget, I'd be at minus 1400. With a little bit of trade management, closing one at plus 100 and closing the other one at plus 700 when I could see price action was at levels. We made around about $800 instead, or 0, which is 1.1R, I think, give or take, something like that. So that was the 2 trades on Monday, and then we went on to the next day, which was Tuesday, obviously, and we had a trade on Tuesday. Just show you now. This is where trade management maybe didn't go as well, but that's okay. So we're on Euro Pound, as you can see on the 15-minute chart. Again, same again. Just highlight it for you now. General downtrend, as highlighted here. and then would come out the Asian session, pick me up to continuation. Pretty good setup really, to be honest. This was Tuesday. So when we zoomed in a bit on the price action, as you can see, I got a bit fearful of this trade. Closed at break even, didn't like it. I wrote on the trade. And in hindsight, as you can tell from hindsight, we could have carried on running all the way down. In fact, where I closed it, which was somewhere around here or something like that, if I just left it and had been a bit more patient, it would have gone to a nice 2-hour trade, and we would have been a lot more up for the week. So that would have been another plus $1,400. But it is what it is. I'm not fussed. Yes, I could have got more out of that one, but the two losing trades on Monday, where I'd come out plus 1R, and then this trade here, which I came out around about break even, I think it's about minus $50. So on a $700 trade, it's break even. I did get a bit nervous on this trade, which is why maybe I closed at break even. I came into the trade and then pulled all the way back up to minus half R. In hindsight, we got these nice levels here protecting it, so we were pretty safe really. But I was fearful of taking a minus 1R, after gaining a plus 1R on the previous day. So that would have left me at break even for the week. So I think I was over protective of the account. Thankful that I was up 1R on 2 losing trades, but I overprotected this account, and once this price action came back down to a break even, I closed the trade, just thankful that I was out and expecting it to reverse on me to my stop loss. But of course, as per everything in trading, it was a lovely trade and went straight to 2R, so I could have made $1,400 on that one. Okay, so as you can see, I filled out my spreadsheet data as per usual. These were the pre-trades. We've got USD CAD, New Zealand CAD, and Euro Pound. These two combined gave me $770, and then we lost $53 on that trade, giving me a total 3 trades for the week at $722, or approximately 1.03R gain for the week. There's a few little mistakes and errors. Entering 2 CAD trades in opposite directions, probably not the best idea. Closing this trade out of fear, basically, at break even, and then watching it run to 2R was a bit annoying, but it's not the end of the world. We're up for the week by 700 again. And then we can show this in our totals down here. There we go, so week 9. As you can see, we're having a good time. It's fine. And we're increasing the risk slowly. So we started off at $500 per risk for the first 2 weeks. Then we moved to $600 risk per trade for a good 5 weeks. And then we decided to bump it up to $700 per trade, per risk per trade, so we say. And then obviously we'll go up to 800 as and when, approaching $1,000 per trade. It's a 100k account, so $1,000 is only 1%. So as you can see, we're doing pretty well anyway. We're about $5,000 up on the account. It's a 100k account. The number of trades in total is 19, and we brought in a pretty good R result over the 9 weeks. So that averages about 1R per week on average. But 1R is slowly increasing from 500 to 600 to 700. So 1R gets more each week. And then these are the cash values here. So that's it on the main account, on the session breakout trading setup. But we do have a little confession. That's not all I do. And I'll show you now. So here's my little confession. That is not the only account I'm trading. I'm also trade copying that account across to various other prop accounts. So here's my FTMO account. It's a 10k account. As you can see from the balance here, we're at 10,509. This account was set to trade copy across whilst in drawdown. So I'd started the account and we're about $300 in drawdown. Target is 10% on FTMO, so we're looking for $1,000, I believe. I think so. So we can go into the metrics now, just have a quick look. Okay, so here we are on the FTMO account. It's a 10k FTMO account, and all we're simply doing is trade copying the trades from my main account. Upscaled a little bit on the risk onto this account using a trade copier. So as you can see, this is what I was trading it before, and then from this point here, I've been setting it to trade copy across from the Asian session break setup that I've been showing you, and these are the trades ever since. So we've got a good consistency score, 87%. We're passing these, and we're currently 5% up on this account. We need to get that up to 1%. But what we are doing is we are risking the greater percentage risk of the account per trade on these smaller accounts. So for example, on the 100k, we're currently risking $700, which is 0.7% per trade. Whereas on this account, we might be risking, I think it's more like 1.2% or 1.3%. We'll have a look in a minute and I'll show you. And there you go. And all of these accounts are trade copied across a few other accounts as well, which I'll show you now. Okay, so now you can see we're in the trade copier account. You can see all the accounts I've got on my trade copier. The main account we're trading here is the 100k high stakes account, which is this one here. As you can see, it's around about just under 5% up on the account. And then we have all these other accounts here, the 10k FTMO that we just went through, currently 5% up. And then we have some other trade accounts which we're just copying across to. We have a 10k high stakes account, which is currently 2% up, and a 20k high stakes account, both of those for 5ers, and currently 4% up. Then we have this old account here, this phase 3 bootcamp account, which is from the past and was in drawdown, so we're just slowly building that one back up by trade copying across to that. Here you can see how I trade copy across. Everything is linked to the 100k high stakes account, and then all we do is when the trade is taken on that, it places a trade on these other accounts here. There's the 10k FTMO we discussed, with a lot multiplier of 0.25. So for example, if we're risking $700 on the main account now, it's just times 0.25. So on the 10k FTMO account, we're risking $175 per trade, which is obviously 1.75% per trade. So a higher risk on the smaller accounts there. And then we just scale them like that. So the smaller the account, the higher the percentage risk, as you can see, because if we blow those accounts by going to drawdown, that's fine. But most of these accounts are up anyway, so that's fine. We have a look at the other ones. Now, we won't worry about the phase 3 bootcamp because all we're doing really is pulling that one out of drawdown from the past. But we can have a look. So it's $700 per risk on the main account, with a lot multiplier of 0.1. So we're currently risking $70 on that account per trade. And it's a 15k account. So just slowly edging that one back up to 15k to get out of drawdown. The FTMO account we've discussed, risking 1.7 whatever it was percent. Then we have the two 5ers accounts, the 20k high stakes and the 10k high stakes. So on the 20k high stakes, as you can see, there's a lot multiplier of 0.35. So we're risking $245 per trade. On the 20k account, so just over 1% on that account, 1.2% risk per trade on that account. And then the last one is the 10k high stakes account, which we have a lot multiplier of 0.14. So we're risking around about $100 per trade on the 10k, so 1% again. So as you can see, we're risking about 1%, 1.2%, 1.7%, and a tiny percent as we trade copy across to those accounts. In fact, that one I've got paused at the moment because I'm doing something else on. And that's all I do. I have my main account, which I trade on just easily on the 100k high stakes account, and then I trade copy across to my other accounts with varying risks per trade based on the account conditions. And that's it, that's all I do. That's my little confession. So that's us done for the week. Thanks for watching, and I'm sure I'll do a review next week. Thank you.